Honestly, nobody was expecting this Tesla stock breaking news. It's really catching everyone by surprise. Tesla announced about 2 hours ago that they will build a new 1.6 million square foot Megapack factory in an existing building in Texas, allowing much sooner start of production. This factory will generate an estimated $8 to $10 billion of revenue annually. The deal includes $44 million in facility improvements and $150 million in Tesla manufacturing equipment that Tesla will install. The next phase involves a new $31 million distribution facility with about $2 million in Tesla distribution equipment and building upgrades. Tesla is investing $194 million in upgrades and equipment and getting a new Megapack factory out of it that will be able to generate $8 to $10 billion of revenue like this year. That is massive news that, of course, Wall Street doesn't seem to be catching on to at this very moment, but I do think will be important over the coming days, especially if the markets do start to bounce here. Tesla, well, it's going to bounce a lot more, and I think all of the good news that we have gotten recently should not be overlooked, including this today. The Waller County Commissioner's Court approved a tax abatement to support the project today. They say, quote, "I want to thank Tesla for investing in Waller County and Brookshire. This will be a state-of-the-art manufacturing facility for their Megapack product. It is a powerful battery unit that provides energy storage and support to help stabilize the grid and prevent outages," said Vice Yocum, the Waller County Economic Development Partnership Executive Director. Now, Texas has an issue with that. As I've heard, they do not have the best grid, especially when it's hot and people are using a lot of energy. So Tesla, could probably sell a lot of these products just locally in Texas. And as Elon Musk has said before, the demand for Megapacks long term is basically unlimited. I mean, if you really think about it, any grid system really needs Megapacks because essentially the extra power that you generate just gets lost. Okay, it doesn't get stored without batteries, and this is something clearly that is at the very early innings of adoption, and Tesla's really the main leader here. Also worth mentioning that Tesla's energy generation and storage business was by far the fastest growing segment of Tesla's business last year, and it basically is every quarter now, and it's also the highest margin. So this could be good for the margin story behind Tesla. So for anyone that says, uses Tesla's PE to bag on the stock when we all know it trades on future earnings, future valuations, future growth, well, it's going to make the argument a lot harder to bash Tesla with, you'd expect, 25% net margins on $8 to $10 billion a year. That is a substantial difference. I mean, let's just assume that Tesla can do 10 million or 10 billion in total revenue per year out of their 3 factories fully scaled. Let's assume they have a 25% net margin. You're looking at $7.5 billion to the bottom line. Divide this by 3.3 billion shares outstanding, and you're looking at about $2.27 of EPS alone from this segment of the business. Divide this by 3, this potentially could add 75 cents to Tesla's EPS. Yeah, Wall Street has not figured this out yet. Even in a more conservative estimate, the numbers, look really good times that. Let's do 27 billion just to give you rough numbers here, assuming that you do about $9 billion per year from the 3 Tesla Megapack factories, times this by, let's say, 20% net margins, you're looking at $5.4 billion. Divide that by 3.3 billion shares outstanding. alone, the Tesla energy division could generate $1.63, $1.64 if you're rounding here in EPS. Divide that by 3, and even in a more conservative estimate, this new facility could add 54 cents to Tesla's EPS. That's a lot when you consider the multiple is around 100. That actually adds about $54 to Tesla's reasonable current market value by committing to opening this facility. Now, it may take some time to obviously get $9 billion. It may be 12 months from now. It may be from Q2, Q3, Q4, and Q1. Okay, so you might not be at that $9 billion run rate until, roughly Q2 of next year. But this is a material difference for Tesla stock. Obviously, on top of Robotaxi and Optimus and all of the great things that I expect will happen this year, this is another big one that, again, nobody really expected. I didn't even expect this because it's not something that Tesla's building, right? Besides the Fremont factory, in which Tesla bought that from GM when they were struggling in 08, well, technically it's like 06, 07, Tesla always builds their own facilities. Like, there was really no heads up on this, and that's why it's a big shocker. Now, option activity here on the day-to-day in Tesla was not nearly as good as what you are used to seeing. You had 221 different trades totaling $234 million with a positive order value of 28%. It's kind of interesting, though, and I think this might make sense to some of you guys, but almost every day we've had very good option order flows. Even on days where Tesla's down like 5, 6, 7%, sometimes more than that. I'm curious to see if this negative order flow today could actually mean that Tesla does well tomorrow. Kind of like the inverse of what we've seen recently. Something I will be paying attention to. Now, it looks like here on the day today, there was quite a bit of shorting pressure that came into Tesla stock towards the end of the day. You had about 872,000 shares that were sold short. A majority of this towards the end of the day. I start making the videos that come out at 4 around 2:30. And at that point, you had about 600,000 shares that were on net being covered today. So in that last hour or so, you had a lot of shorting pressure that did take place in Tesla. Now, Tesla stock is up a little bit here in after hours. You were up 2.6% today. You're up about 0.11% in after hours. You're sitting right below your 200-day moving average, which is at $280.33. Tesla's at $279.29. So if you get above that 200-day moving average, history would support a larger rally to come for Tesla. Last time this actually happened, where you were below the 200-day moving average for more than a couple of minutes, actually closed below that, was here. Okay, on July 1st of 2024, you broke above the 200-day moving average. You went up 6% that day. You went up another 10% the day after, and then 6.5% the day after, and then another 2%, and then another 0.5%. Then you went up 4%. Then you went up 0.35%. So history shows when Tesla breaks above that 200-day moving average, you tend to have very aggressive rallies. The time before that was, I guess, depending on which ways you're looking at it here. This time you went up 6% the next day. Here you went up 4% like 4 days in a row. It was between 1 to 4%. And then you just continue to rally, right? You went from that break of $198 to $300. Again, here you went from about 218 up to about 265. This break here, you went from about 284 all the way up to 384. Again, you get the idea. Anytime you're below that 200-day moving average and you break above that, it tends to lead to a strong rally. Now, I don't know if that's going to happen this time around. That's what history tells us. History also tells us that when Tesla is oversold, it also goes through large rallies. So I would say the historical precedence here looks good for a larger rally, but there is so much uncertainty and so much volatility out there. Just any minute things can change, right? And we're very susceptible to the headlines that are coming out. And unfortunately, I think we're not really going to break to new all-time highs or get any kind of material rally in the broader markets until we get clarity on the economy, clarity on trade, and it looks like that volatility is really dying down. And I have no idea when that is going to happen. Okay. And the longer it goes on, the more uncertain, the more nervous investors are going to get, because with the tariffs, not only are we concerned about inflation, and I say I'm not concerned about inflation from them. I'm actually concerned about the economy weakening, but it really forces the Fed to not react to the economy, which is weakening. And that is a double-sided problem for markets, right? Tariffs are going to weaken the economy. Tariffs could cause inflation, as Trump and Lutnick have said. That's not a good position to be in. That sounds a lot like stagflation. Futures are open for tomorrow's trading session. It looks like the Dow is down about 18 points, negative 0.04%. S&P's down about 0.11%. NASDAQ down about 1/3%. Oil futures up 0.2%. They really had a rough day today for a lot of different reasons. There's a lot going on with oil right now. One concern is the growth slowdown that, when growth slows down, there's less demand for oil. That has been something that has really affected oil recently. And the OPEC Plus output increases, that has also been weighing on oil. Overall, a great economic development. You should start to see lower gas prices at the pump, but it is kind of a warning sign, because if oil's weakening, because of economic activity that is weakening, it's going to be hard to hold up any rally that we get in markets. Now, 10-year Treasury yields are up about 3 basis points or so as well here in after hours trading, up to about 4.294%, which if you see 10-year Treasury yields start to rise again, well, that's really an issue around inflation, because we haven't gotten any economic data that would suggest the economy's, just doing fine. Like that's not what we've gotten out of the data recently. So this to me seems like more of an inflation concern than growth scares are subsiding kind of thing. Now we do have some headlines as well here in after hours. New York Fed, Pearly, I think that's how you say that, sees pressures in repo market have been gradually increasing. And this is something we talk about from time to time here on this channel, but you can actually see the reverse repo operations every day, and they have really fallen a lot from where they were just a couple of months ago. Today you had 139 billion accepted, but some days you're getting down to like 60 billion or so, and the Fed wants to stop their balance sheet runoff, as this starts to get pretty low. So you've recently went higher as volatility has picked up in markets, but you're getting down to pretty low levels. So this could maybe bring an end to quantitative tightening a little bit sooner. We'll have to see. But some of the bigger headlines here in after hours is from the Commerce Secretary Navarro. He said on Fox Business that, quote, "We want to see Mexico, Canada crack down on China." Now, coming tomorrow morning, we are going to get challenger job cuts. That is essentially expected or announced layoffs. Okay. And, the higher, the worse off, the lower, the better, at least from an economic perspective. Now, the balance of trade, exports, imports will be coming out as well tomorrow morning at 8:30 in the morning. You will get initial jobless claims to go alongside that. The exports and imports data, the balance of trade, will give us a new GDP update. You can see the next update is here Thursday, March 6th. We're currently tracking at a negative 2.8% GDP. That's a really bad number, clearly. Like, that is deep recession territory. And we really haven't got any data recently that would kind of argue against that. It's like, oh man, the data just keeps coming in bad. Okay, so you want to see some normalization in that balance of trade data coming out tomorrow morning, and then the wholesale inventories month over month that come out at 10 o'clock in the morning. So we will get new GDP update. And I think Wall Street will pay attention to that. You do have Fed Waller that speaks as well, 3:30 in the morning. Probably the biggest thing Wall Street's going to care about, though, is that initial jobless claims number, okay? Because tomorrow is one day before the non-farm payrolls on Friday. And typically when initial jobless claims are spiking, it's usually not the greatest labor market, right? It's kind of a red flag for the labor market data. Last week, you had a big spike in initial jobless claims. You're expecting 235,000, so you're expecting that number to come down. I think it could probably spike further, and if it does, Wall Street's probably not going to like that, and I think bonds will like that. I think bonds will catch a bid when they did not today. And then obviously Friday, non-farm payrolls, the unemployment rate, a bunch of Fed speakers, including Fed Jerome Powell, that will be speaking. So really the next 48 hours are going to be very important for markets, really to judge the growth story, right? Are we entering into a stagflationary economy? Are growth concerns really warranted, or did we overreact? In a sense. We will also get a new AI investor sentiment survey coming out tomorrow. The last one we had was really bad, showing really the most fear since the lows of 2022. Very abnormal for the S&P that was only down about 3%. So we're all kind of like wondering, why are people so fearful? And could that be preceding a recovery in markets? Typically it's a contrarian signal. You want to buy stocks when people are this negative, but normally the S&P's down 25% from all-time highs by the time people are this negative. You're only down 3%. So I think there's some nervousness around sentiment being so negative when you're so close to all-time highs. And something else I will point out as well is we really haven't gotten a panic moment in markets yet. Yeah, the VIX has been going up. I mean, the VIX was down today, but at one point you were at what, like 20, 23, almost 24, but you haven't got that panic, right? The VIX hasn't really spiked yet. It's just been trending higher as people have been buying more puts. And well, maybe we need to see a bit of a panic before we get that ultimate low, which is another reason why I would be a little nervous, you know, going all in the SPY here, for an example, or some of your high-flying momentum stocks, because you have not gotten that flush out panic just yet. And we'll see that with the VIX. When the VIX is up, you know, 30% in a day, then we can say, hey, maybe this is the panic low. But I don't think we've seen that yet. Although Tesla's down 40+%. There's a bit of panic in Tesla recently. I have been buying the crap out of Tesla, and I will continue to do so as long as they're giving these kind of discounts. I mean, it's crazy Tesla's selling at these prices with the business doing as well as it is. And I mean, if you have a longer term perspective, you want the stock to fall more to get a better price. And again, I don't know if the stock's going to recover tomorrow, but I do think by the end of this year, we're going to be sitting much higher than where we are today. That is it, ladies and gentlemen. Let me know your thoughts about all of this down below in the comment section. One last thing that I will add is you do have still some earnings for the rest of this week. Tomorrow, pre-market, JD.com, Cracker Barrel, and Kroger's. And then tomorrow in after hours, Broadcom, Big Bear AI, and Costco, and Gap, Hewlett Packard, Samsara, some others. Broadcom, Costco, gonna be interesting ones. Broadcom's obviously that AI trade. Costco, high-flying retailer, mostly deals with food. So we'll see if people are cutting back at a deeper level. But nonetheless, guys, enjoy the rest of your day or night, and I will see you in the next one.